St. Mary's College Biz Ed 123 Financial Management, Goldman Sachs, Team 7, Take 7, and Action.
Hello everybody. Today we're going to be doing a Goldman Sachs stock valuation report. And so our suggestion is to sell. We have our intrinsic stock value at $156. Our current price is $194 at a discount of 20%. And my name is Blake Hatcoat. I have Logan Brockham over here and Emilio Osmina. And so first we'll go over what we'll be talking about today. So first we'll do our company overview, our financial conditions, our technical analysis, our stock valuation methods, our recommendation, and finally our appendix and our references. So first, the company values of Goldman Sachs, the business principles. We put our clients first usually in, Goldman Sachs put their clients first, sorry. And their goal is to provide superior return to shareholders. And our people and culture, the people are the greatest asset in the company, and they help move the company forward, and they will help provide profits in the long term. And a little background on the company: it was founded in 1869 by Marcus and Samuel Goldman, and it's a publicly traded company, and the industry is commercial bank, and our headquarters is in New York City, and we have about 40,000 employees. Leadership for the company. The chairman is Lloyd Blankfein, Executive Vice President Karen P. Seymour, and our current CEO is David Solomon, who has only been on for about a year. And our operations and services. They advise, manage, finance, invest transactions with financial marketing, and innovate.
And then bank rating by total assets, so we rank about 5th in the industry, a lot lower at about $900 billion. Organizational is the example of the organizational structure, visual. And SWOT analysis, the strengths of Goldman Sachs. Goldman Sachs is a very strong brand name with about over 35,000 employees. They're a leading global financial services firm, and they present over 100. They're present over 100 markets. Weaknesses, kind of over-dependent on the U.S. There's stiff competition from other financial service providers, obviously, and fluctuating markets result in instability. Our threats: changing government relations and financial crisis and recessions, also unstable mortgage market. Here's the visual of our operating segments on the pie chart.
And over here you'll see the financial condition is basically average. They're kind of poor in their ROA percentage ratio. And next slide. Yeah, also some of their other financials, they're above average with the PE, dividend yield, operating income, EPS, growth, and such. And for the technical analysis, I'd say that the support line is going to adapt, and it's going to go below the support line because there's probably going to, the flow of the market is downward trending right now, especially in the past year, and I don't think it'll hit the current support line and break back up. I think it'll just continue to fall in a bear market. And the valuation method we used for our perpetuity model, this is how we calculated the CAPM for that, and then we plugged everything in with all the EPS and growth, and we chose the medium on the range just to be safe, not too high or too low. We don't want to under or overvalue it. And here's some of the Gordon growth. We decided to have a lot of low growth rates because we find that the market's going to be falling these next couple of years. And we chose the middle ground for all of the growth rates, just to keep it simple and not over or under. And for the multiple approach, we looked at all the different markets, and we decided to do the 16, 15, and 14 multiple. And we just chose, again, to go for the middle. And the same thing for DCF, we chose to go for the middle, and our WACC is at 8%, and these are all the current values and intrinsic values. And we decided to weight all of it, and we chose to weight DCF the highest at 50% because all the other ones are less accurate in the multiple approach and is a bit more accurate than the Gordon growth or the perpetuity because the perpetuity doesn't take into account any growth rates or anything like that. And we intrinsically valued the stock at $155 from the current stock price, which is $194. And we decided to sell, obviously, and because the intrinsic value drops by the current stock price by 20%, and because all the markets are really volatile right now, it's hard to say whether or not we should buy it, but with all the volatility, you should just sell, liquidate, cash out now before you start